Yeah, the outlook for India is certainly a lot brighter than it was in recent years. We've seen an uptick in growth. On our numbers, we're expecting India to grow at something in the order of 7% this fiscal year, which is among the highest growth rate that we see across all emerging economies. That's not to say India is completely out of the woods. It does have a number of issues to face, primarily on the supply side of the economy due to a lack of infrastructure, a lack of power generation, a lack of roads and ports. Also, it faces a number of external risks. If there's a recurrence of global financial volatility, that will also affect India. But it has a much smaller current account deficit on these days and a much larger reserves, so they should be better able to withstand those shocks. India's monetary stance has been tight in recent period, and we've seen a big reduction in inflation in India in recent years. It's come down from about 11% in late 2013, now it's down around 5%, which is a big reduction. But nonetheless, 5% inflation is still high, expectations are still high, and so we recommend that they keep a tight stance. By that I mean real interest rates kept positive. The government is still supporting by lowering food price inflation, by releasing stocks of food, lowering support prices in agriculture. So all of that is contributing, as well as low oil prices, which is a big bonus for a country like India in keeping inflation low. And we're pretty sure that if the stance is kept tight, inflation will be even lower going forward.
The newly released budget for 2015-16 targets a fiscal deficit of 3.9%. This is a little bit larger than we had expected, but we are encouraged by the fact that the composition of spending is better now. There is a renewed emphasis on public infrastructure. There's also a further cut in subsidies. As well, the government has reaffirmed its commitment to fiscal consolidation over the medium term. We look forward to hearing about more measures which will underpin this consolidation. These could include further reductions in subsidies as well as progress in implementing the goods and services tax. Such measures will be needed to create the fiscal space so that the government can spend more on infrastructure or on social sector priorities. Encouragingly, several positive policy actions have been taken by the new government to boost growth. However, more is needed going forward to increase medium-term growth as well as to create more jobs. Some of the key reform priorities include labour market reforms to include more flexibility in the labour market to create jobs for the youth. Another important policy priority is power sector reforms, and these should include improving the pricing and allocation of natural resources such as coal. Finally, reforms are also needed to ease land acquisition as well as other environmental clearances. A comprehensive set of reforms such as these will lead to higher growth over the medium term as well as increased job creation.